I'm Matt Bichette with REIT.com, and I'm here in New York City for REIT Week 2012, NAREIT's Investor Forum. Joining me is Michael Knott, Managing Director with Green Street Advisors. So Michael, what's Green Street's big picture view of the office sector right now?
The office business is one of our least favorite real estate property types. Over a long period of time, NOI growth has merely been average, yet CapEx requirements are actually above average, and at the same time, cap rates are below average. So to us, that's an unappealing mix. So we tend to like other sectors better than office. Now that being said, within the office sector, we have found that we much strongly prefer high barrier markets for the long run. We feel like those markets provide after CapEx NOI growth that's superior and helps them win in the end relative to more plain vanilla suburban markets.
So you like the top urban office markets, even though the cap rates are very low compared to the suburban, typical suburban market?
Yes, for long-term investors, we feel like the high barrier markets tend to be better. Now, if you're a short-term investor, you can time suburban markets in and out and make money that way. But for long-term investors, we really like the high barrier markets. We feel like the long-run rent growth on an after CapEx basis has been much stronger, and that's helped deliver strong returns. And we feel like that'll continue to be the case in the future. And we feel like in those markets you have more protection against new supply, which results in longer economic useful life for well-located buildings.
And picking up on that, what's the prognosis for office fundamentals?
The office fundamentals are still somewhat weak. The forecast hasn't really been that robust to begin with, and recent weakness in job growth numbers raises a little bit of a cautionary flag. Fundamentals are still grinding along, still slightly positive demand growth in most markets. So we expect that office fundamentals will continue to lurch forward slowly. And from a cash flow standpoint, office held up really well during the downturn because of longer term leases. And so NOI growth was actually better than other property types during the downturn. But over the last couple years, it's continued to lag, and we expect that NOI growth will continue to lag in office compared to other property types. We say that we're keen on 15. We think that's when office NOI growth will again exceed the average for other property types. But it'll feel like a slow recovery until then, on average for all the office REITs in total.
Michael, thank you so much for joining us today.
Thank you.
For more on this and other news and analysis, be sure to visit REIT.com.